Afternoon, fellas. Welcome to another daily market review. Today's date is September 3rd. It's a Thursday, a day before FOMC Friday. We had a large range bound market, but it was in a large range. So it was providing more or less 200 points up and then 200 points down. And then the rest of the session ended up being a consolidation, which is pretty typical for for an NFP, or prior to the NFP rather. But let's take a look at what happened today during the New York session. So we had initially an open range gap, which was a large gap. It was 100 and almost 30 points in Nasdaq, and market essentially bounced from the sell side of it and rated equal highs from the overnight session, and it had a reversal from there on, and then it kind of chopped its way around, stayed in the open range gap, basically balanced it, and then delivered sell side from there, and the rest was choppy. The sell side delivery came at 1 p.m. Basically after lunch hour during PM session, and the rest was basically a choppy price consolidation price action. So let's take a look at this PA on the 1 minute. But first, I'm going to annotate the buy side or equal highs. Actually, let's keep it on the left. Alright, so this is the equal highs from the overnight price action, and we have equal lows here, which was taken during pre-market and rallied. But let's take a look at this PA on the 1 minute time frame, in a 1 minute time frame. So here is the 1 minute, very like sloppy, choppy PA after this initial rally. It ended up being a seek and destroy here, and then it delivered deep premium, run the sell side, sell stops, and then consolidated the whole session afterwards. So the things that I want to mention is these equal lows from London session, okay, which was not taken out. It is a high probability target, but it left it open just for the sake of NFP, in my opinion. And then we have these lows, 930 low, which was taken on Nasdaq, but ES didn't touch this low. It was swept at 930. So we have this 931 candle low, 932 actually, which acted as a draw on liquidity later in the session. It got down there at 1 o'clock, right after lunch hour. So let's take a look at this. So we have the 15-minute equal highs here. The market during pre-market, it started basically a buy model here. Now we have a dealing range from high to low. It traded all the way down to the range equilibrium, did some damage to the sell side, basically 3 drives here, and that's how or where New York opened. As you can see, it opened in discount. Sell side was swept several times, and right after the open, it basically just rallied. This is the second leg essentially, and it rated the equal highs. The rate, though, in terms of the order flow, swept the sell side, rallied. We have this fair value gap right here, which was inverted initially, but then we have the lower one, which was essentially a 5-minute fair value gap, 5-minute BISI. So the market, as the 5-minute BISI or fair value gap was formed, it traded down there at 940, as you guys can see. This is algorithmic in my opinion, and used that 5-minute fair value gap to rally furthermore. Initially, it was rejecting or the opening range gap CE, but it displaced afterwards from the 5-minute fair value gap. Displacement here came down to the upper portion of the BISI, which was also opening range gap CE. Kind of chopped its way around. Rate rallied afterwards. This was, I think it was basically waiting for 10 o'clock news, in my opinion, or the macro hour, because the rate or the retest of the fair value gap came at 9:47 precisely, and the rally 9:53 during macro, and it pumped all the way up to the equal highs. Along the way, it cleared the opening range gap high. Initially, it rejected it. I can't say it rejected it, but it reacted. But it was trading down into the BISI with that rejection, so it traded down to the lower portion. I would say this is let me see. I think either this one or this one is a measuring gap, but I'll leave that up to you guys. I'm not super familiar with the measuring gaps. I did not study it that much, but yeah. Let me see. Yeah. Okay. So it came down to the lower portion of this BISI. This is basically silver bullet, and at 10 o'clock it rallied all the way up to the equal highs and cleared this liquidity, which is essentially a 4-hourly. Let me go to the 4-hour. So price is leaving these equal lows on the 4-hourly, and it's doing damage third time to the buy side, which is basically a bearish 3 drives with equal lows resting below. And these equal lows I think they're gonna be targeted tomorrow at NFP. During NFP, I think 8:30 will send it down here right away, but we're not gonna be trading that either way, so I'm not too concerned about that. I wish it traded down there today, but well, it's what it is. So here, the equal highs, it was rated. It basically had a displacement. The last displacement, once that got inverted, the price was gone. Here, it formed an OB. I would not personally use that because this kind of is equal highs with a bearish SMT, and Q did not rate the high, the short-term sell side, but ES did. So that forms an SMT, and we had inversion fair value gap. Once that inversion fair value gap was formed or confirmed, market basically had a huge down close candle, which was 75-76 handles, and it caused a displacement essentially. So we had this displacement to the south side of the curve. Let me clear all that. Okay. And initially, let me pull the end dog from Wednesday rather. Where is it? Oh, okay, I need to do 3 now. So it traded down into the I think that's the discount or a range equilibrium from the first leg. Yep, range EQ from the first leg, and it traded up all the way to the essentially this inversion fair value gap and the upper portion of the CB, which was tricky because this is a very, very large range. Like, it drops 75 points, wicks down more, 30 more, and then retraces all the way 91 point. Very dangerous. So if you're filling the CB right away, you're doing it wrong. I don't think anyone in this server did that, but I'm just saying. And if you were in my live stream today, as this candle was forming and the fair value gap was forming out, I literally said this. I said I am going to wait for a bearish order block for risk purposes. Okay, that's what I meant, because if I feel this fair value gap, maybe like open range gap high, let's say, my stop loss would be above this high, 45 points. That's way too much risk. So instead, you wait for an order block formation. This is the order block formation. It never got retested, unfortunately, but if it retested this OB, that would have been my short. Instead, it just dumped. So it left one breakaway gap here, another breakaway gap here, and furthermore down into the end dog from Tuesday, and it formed along the way a new SIBI essentially. And here it rated the sell side one more time and pumped from the first fair value gap of the New York session, which is, I should annotate that right here. I'm gonna make that yellow just to make it a little more distinct. So from the latest SIBI CE, it rated it rated the sell side down into the first fair value gap of the New York. But the most important thing for me was that this is the reason why I did not fill this SIBI. Okay, I think this is very important. It left equal highs here. Okay, I don't like to short into that, so I anticipated instead a turtle soup above this high because of that purpose. Nothing more, nothing magical. And it overshot. Oh, what did I do? Something happened there. So it overshot a little further instead of rejecting there. It caused 1 and 2 bissies essentially, but that did not concern me. Technically, because I knew that it was range equilibrium. Got retested the premium portion of this south side range. Retest of this area, which is basically premium, and it formed a bearish SMT at the highs, and then it inverted the latest BISI. Once that inversion was there, that's a confirmation to go short. This is essentially a balanced price range also. Retested the balanced price range and delivered the short-term or minor sell side, which caused a bounce. But the only thing that catches my eye is, I'm going to zoom in a little bit. This wick, as it raised the sell side, although the first fair value gap of the New York session is being respected with the bodies, as you guys can see, and the wicks are doing the mohawk essentially, but just look at this wick. I'm going to zoom in a little more. It is literally falling shy 0.5 handles, 0.4 or 0.5 handles, 0.45 points from the opening range gap low, which indicates to me that this low will be rated or act as drawn liquidity later in time. Okay, so I did not change my bias with that, but instead this is what I was thinking through the later times in my live stream. So the sell side was rated, and I'm like, okay, if it displaces, which it did right here, and the CE never got retested, so I used the upper portion, which indicates strength. If it displaces to the upside from after the sell side rejection, it's going to go for this buy side, right? And that buy side should be a turtle soup. Why? Because this is essentially a double purge. So sell side first, buy side second, and then it should low resistance run to the sell side, which also has confluence equal lows here and the 4-hourly market maker sell model. So it did exactly just that. Here the buy side was rejected, inversion fair value gap here. This is the overblock. It dumped, came all the way down to the 25% of this wick, I think, and it rejected there, unfortunately. Swept the sell side last time from the SIBI, upper SIBI actually, this one, and formed a breaker block here. Now once it does that, I think the odds are against the sell side, and this double purge idea or anticipation kind of invalidates. So the reason is, sell side was taken, it went for buy side on the 1 minute time frame. This buy side raid caused a displacement first and foremost, and then we have this breaker block here, which is essentially a unicorn. So it accumulated long positions here. I was watching this, didn't even sweep the low, which is equal lows right now. I don't like that if I'm bullish. And it went all the way up to the September 19 opening range gap high, rating these buy sides, and also no manipulation wick here from 1020 to 1019. It went all the way up there, kind of worked its way around here during lunch hour, engineered liquidity, also trapped long positions, and this is double purge also. It's not a double purge, but like this is the buy side. As it goes above the buy side though, it left these equal lows. That is indicating the buy side here, or this one right here, will end up being a turtle soup likely, because it's leaving equal lows. Now I need to check yes though, whether that was a bearish SMT, bullish SMT, and stuff like that. Let's see. Alright, we have a bearish SMT at the highs, and at the lows we don't have a bullish SMT. So the odds are against the buy side, and thus, although it left equal highs here, actually let me see, is that equal? Yeah, it equals. This place lower, right at 1228, 1230 ish. Yeah, this last SIBI ended up being a breakaway gap. Like, this is really hard to anticipate though in this case, because the breaker block technically is slightly higher, but it happens. Like, if you miss this entry, you can fill this OB anyways, because the high is not violated first and foremost. That's very important. And secondly, if you know that it's going to act as an order block here, you can fill this low or open price, or if you don't like to do that, you can look at this last, not that one, but this one, this wick CE. You can fill that as well and use the order block, anticipated order block, as your stop loss. Quite an aggressive entry, but it's doable. You can also look at its mean threshold before it forms. You can fill that as well. In this case, it didn't even go up there. But anyways, it dumped. Where is it going? It's going for these equal lows here. It cleared that, and the rest of the session was basically accumulation or consolidation. I'm not going to look at this price action, but here's what I'm going to do. Before I close this up, I'm going to read this order flow here, try to find the potential entries. So if you could anticipate this, I mean, initially I probably wouldn't be able to anticipate this as a breakaway gap, but what I would do is, as this kind of prints and the next candle moves away, I would be questioning, okay, this might end up being an order block, and you can technically fill that. And so it dumped here, kept going, didn't quite form. SIBIs, there are volume balances without buy side wicks. The first fair value gap retest happened very, very late. I would not have executed there. That's also first fair value gap of the New York session. Once it got inverted, came for the retest and dumped to the south side, new order block. Once this order block got inverted with displacement, which it did here, and this is a breaker block, 1 and 2 up close candles, these are breaker blocks. Once it got inverted with displacement, this is a unicorn basically setup. Within that displacement, you have a breaker block. It didn't quite went for the buy side, but just chopped, built buy side, built sell side, ran on equal lows, and that equal low run ended up being a rally from discount of the first leg here, basically. So equal low formation and discount, it ran on the equal lows and rated the highs. I mean, this PA should be avoided at all cost, and if you don't know how to do it, the easiest way to do it is looking at the Forex Factory news calendar. If you know that tomorrow in the morning session NFP is going to be released, you should avoid the PM session tradings on Thursday. So basically the late in the session, or the whole session actually, like if you zoom out a little bit, so this is New York open, New York close, the whole session, although it was a large range bound day, it was basically going back and forth in between the opening range gap CE, opening range gap high, opening range gap low, and we were stuck in between that gap, and the opening range gap CE essentially acted as a range EQ, just chopped its way around, and it left. This is for tomorrow. I know none of us will be trading 8:30 or executing before 8:30. That's my thought process going into tomorrow. I should as well just share this. We did damage once to the buy side, okay? And we came all the way up and swept it one more time while building liquidity. One sell side, second sell side, third sell side. So we have a lot of sell stops resting below here. And we have opening range gap from September 19 still remaining open. So what I'm anticipating is NFP will send it down to 635s and ideally 529. I want to see that ideally this week. Doesn't have to be this week, but ideally this week. So I'm anticipating a displacement below equal lows, maybe retest and go for 529s. So tomorrow should be a sell-off day, should be heavy and low resistance run in my opinion. But if it goes for the buy side, I would avoid trading it, honestly, because I probably wouldn't want to hold long positions with this kind of liquidity. On ES, go to the 4 hourly. I mean, we don't even have a bearish SMT. It also has equal lows, but bullish SMT. So today it formed bearish equal lows with a bearish SMT. So I would love to see price levitating towards sell side. Tomorrow, if anything, if you decide to trade, look for shorts and do not trade before NFP. Just trade after, please. But yeah, anyways, guys, I hope you find this insightful. I'll talk to you tomorrow on the live stream. I will try my best to start the live stream before NFP release. If I could, I'm not sure. I'm not promising that. If I could, because it's like 5:30 in my local time. But if I do so, I'll announce it. Obviously, if I can't, you know the drill. 9:15, I'll be live. So until then, I'll talk to you later. Have a great rest of the day and good evening.